What's going on, everyone? How is everyone doing today? Good morning, good afternoon, good evening, depending on wherever it is you are connecting from. I am super pumped up, I'm super fired up about tonight's session on navigating Forex safely using risk management strategies. Now, I've been trading for, let me put this up in a minute. I've been trading for almost 5 years now. And to tell you the truth, I've seen so many things. I've seen different strokes from different folks. I've seen people talk about things that are not practical. I've seen the lies. I've seen the deceit. I've seen the misinformation. I've seen people just put in figures out there to deceive the less experienced or the less, yes, the less experienced or the less educated folks in this Forex space. Right now, one of the things I decided to do this year is to actually, I can't keep quiet. As much as I see these things and I don't do anything about it, kind of like in a way supporting it, right? You know what the Holy Bible says? He who that knows good and does not do it, to him is a sin. I don't know if it's the Bible that said that or it's for my head, but basically, I've decided not to keep quiet this time around, right? I have literally decided not to keep quiet. While those who are putting out the misinformation continue to do their stuff, I would always continue to put out the truth out there so that people can be given the choice to either go for the lies or stick with the truth, right? And so this is just going to be one of many series. Today we're going to be talking about navigating Forex safely using the using risk management strategies. Now, when we talk about a strategy, what comes to your head if you're in the foreign exchange market space? You're probably looking for, oh, Emmanuel is going to show us a chart like this. He's going to do technical analysis. He's literally going to show us how to mark up zones, how to enter the trade and all that. Yes, you're very, very correct. That's the definition of a strategy in a contest. But let me share this with each and every one of you today. I've told folks that are in my inner space that a strategy is not what guarantees your win in the foreign exchange market. A strategy is not what, yes, validates your win. What a strategy does is that it puts you in a position of sticking to certain rules, right? Of sticking to certain procedures before you execute a trade. A strategy is more likely, Euro USD must do this, this, and this before I enter for a buy. A strategy spells out the step-by-step procedure or the confirmations you should look out for before you execute a trade. Now, what makes a strategy profitable is if you've been able to go back in time and you've done what it is, you followed the step-by-step procedure and you discover that 8 out of 10 trades, 7 out of 10 trades were a win, right? You discover that, oh, just utilizing or just following the step-by-step procedures, you add more wins than the losses. That is what a strategy is. Most times we kind of like complicate, and I don't blame people who are less experienced. I don't blame people who are less educated, right? The kind of information that you find out there in the social media space are one that you see somebody tell you his strategy is 100%, the strategy is 95%. In fact, some people only share the wins. They don't even put out the loss there, right? Some people make you understand. They make you assume that this thing is something you can do without having any hiccups. And by doing so, they are not preparing you for the risk ahead. They are not preparing you on how to take care of the losses. So today, I'm going to spell out strategies. Yes, I'm a price action trader. I'm going to show you some of the things I do in terms of the technicals, in terms of analyzing trade setups and how I execute them and how I put in the risk management into it. But first and foremost, let's have this pep talk on risk management. Right now, another word for risk management, when you talk about risk management, it's probably the analyzing, the processing, the whatever, the evaluation of the negative side, an evaluation of the negative side to running a business or to running whatever it is. That's not my field. That's not my field. I'm not going there. Rather, I'll choose to make it simple. Let's just keep it simple. Risk management, in my head, I'm perceiving it to be loss management. Risk management, loss management. Because guess what? If there's no potential of losing, if there are no potential or potentials rather, or if there's no potential to lose, there'll be nothing like risk management. Right? You don't manage anything, you don't manage the risk on anything you know that you're not going to lose on. Do you understand? So I literally want to just transform it. Instead of saying risk management, let's say loss management. Because ladies and gentlemen, I'll put this to you again. As a profitable trader, the way you handle your wins are not what makes you profitable. The way you handle your wins are not what validates you as a trader. It's the way you take your losses, the way you handle those losses. Are you the one that you lose a trade on a Monday morning and your whole week is scattered? Or are you the one that you lose a trade and you're like, oh, okay, we move, knowing fully well that as long as the end of the week you've done more wins than the losses are not even something you should account for, right? But before I really go into, I'm just trying to simplify this topic. Navigate Forex safely using loss management strategy. If you can manage the losses, you would always win. Did anybody get that? If you can manage the losses, you will always win. Your inability to manage the loss is the reason why people lose. Right? So let's talk about how we can manage the loss so that we can start winning. People think that to be profitable in Forex, all it means is that they should be able to maximize their wins and minimize their losses. And you know what? When they say those things, oh, my strategy helps you maximize your win and minimize your loss. Do you know what happens eventually? Practically, in action, those things were just in words. In action, they don't get to minimize their losses. They only focus on maximizing their wins. And see where the mental psyche comes in, or see where the psyche comes in. If you're only looking to maximize your win, yeah, you would get losses. This is the thing. Because one of the reasons why you're looking to maximize your wins is probably because you're scared of losing. And if you're scared of losing, there's a law. I can't really remember the law now, but there's a law that captures the facts, or that captures the scenario where whatever you're scared of losing is what you eventually end up losing. Now, so if I'm looking at the market from the point of, oh, I want to maximize my win, and that mindset is just because I'm scared of losing, guess what happens? You would lose. Ask any trader today, the real ones, not any trader, sorry. Ask the real traders today, the point in time when they decided that, the point in time when they funded an account and they were scared of losing, turned out to be the exact point they started losing. But the point they took an account and they're like, you know what, if this account perishes, it perishes, I'm going to open another account. Those accounts turned out to be the ones where they made the biggest profits. Why? They shifted their focus from the fear. So it's not all about maximize your wins and minimize the losses. Yeah, that's a word. In action, what do you do? In action, I'd rather focus my energy on minimizing my losses. If I can focus my energy on minimizing my losses, guess what? Because that is what I'm focusing on, the reverse would be what I would get. If I can focus my energy on minimizing my losses, I would eventually, subconsciously, maximize my wins. So today, we're talking about loss management. How do we manage losses? How do you get to manage losses? Because if for every one of you who is listening to me right now, if you are a trader or if you're new in the space and the only thing I push to you is about how you manage your loss, let's call a spade a spade. If the only thing I push to you is, oh, this is how you manage your loss, and I don't talk about, oh, this is how you win. If all I'm doing is to prepare your mind on how to manage losses, on how to deal with losses, what do you think will happen to you eventually? If the losses come, you would handle them. And if you can handle the losses, you would win eventually. Unfortunately, what you see out there is people tell you, oh, let me teach you how to trade. And then when you come into their space, what they do is they just show you the wins. Oh, this is how you win. 1 to 1, 1 to 2, 1 to 3, 1 to 4, 1 to 5. Some people even go to the point to tell you that, oh, you could do 1 to 10. 1 to 10. How? What? Don't mind me. But sincerely, I've seen crazy things in this space. 1 to 10. How? Right? They just tell you the potentials, the winning potentials. Oh, if you have done this strategy, you'd have, for every one of you have been following me, and if you've been following me and you see this on YouTube, I want you to comment. When I do back testing, I don't only show back testing, I don't only do back testing to show you the wins. I could go back in time, do 3 months, 6 months, a year back testing. And then at the end of the day, what I would say is, oh, we had this number of wins, this number of losses. Now, ladies and gentlemen, what's the percentage win or what's the percentage loss based on the number of trades we would have executed? I come out straight. Why? If I can't prepare you on how to handle the loss, guess what? You don't stand a chance to win. Right? So for everyone who is going to see this, don't be caught up with the sweet words. No. A trader tells you, I've been winning for a whole 1 week. I've had 100%. Fine. When you lose, how do you handle it? That's a very intelligent question. Yes, I know you've been winning, but just in case it goes the other side, how do you handle it? Have you noticed that when you're speaking to investors, when you're speaking to people you're looking to invest into your business, and you tell them, oh, I'll give you 20% ROI at the period or at the end of so period, blah, blah, blah. The question intelligent people would ask is, okay, fine. You have the potential of making me back my money. You have the potential of giving me my return on investment. But how do you handle the loss? Because guess what? If you can show me how you handle losses when you trade, and I critically analyze that, it puts me in a better position as a learner who is looking to become successful as you are. It puts me in a better position to know how to deal with those losses. People get so caught up with the new things, the amazing things, the lovely things. Oh, how it took $100 to $10,000 in 5 days. That's what people get caught up in. So enough of the pep talk, right? I literally had to prepare a presentation slide that I'll be going over in not just the next 4 to 5 minutes on the different ways at which you could manage your losses. It's risk management. I'm not using the word risk management because risk management, in a way, it's still kind of like makes you identify the winning potential over the. Today, let's focus on the losses. How do we manage the losses? Right? Now, understand this. Navigating the Forex market safely involves the three different ways at which you could handle the navigation of the Forex market safely. The first one would be through research. The research-based the research presentation is something I'll do over time. When you combine research-oriented strategies, you can enhance your understanding of the market and make more informed and calculated trading decisions. This is something I'll go into later on, right? The one we're going to talk about today is the risk management. By integrating risk management practices, now let's change it. By integrating loss management practices into your trading strategy, you can navigate the Forex market more safely and sustainably. Guess what? If you see a doctor that is about to operate on anyone, yeah, and the doctor can actually put into their mind how to handle any sudden situation that could lead to the loss of life, right? They don't just look at how they can help that person become ill and healthy as the person used to be. No, they also prepare for, I think some people say contingency or exigencies, whatever it is, right? I stand to be corrected on that. Then I'm just saying, doctors would also look out for things that could go south. They would also prepare for situations that could turn things upside down, right? So by preparing for those situations mentally would help them deal with it if it comes. If you prepare mentally, on how to handle your losses when trading. When you lose a trade, you'll be in a better position to handle it, to be able to spot out opportunities that could help you win. See, if you have any strategy, and now when I'm talking about strategy, I'm talking about the step-by-step procedure, the confirmations you consider before you execute a trade, right? If you have procedures like that or confirmations like that, that you've backtested, and it puts you in a position of winning 6 trades out of 10, you are a successful trader. As long as you stick to those principles, as long as you stick to those procedures, you are a successful trader. I'm saying even if your wins are 60 and your losses are 40. Right? So we're going to go deeply into loss management. Now let's talk about the discipline trading aspect. By integrating discipline trading practices into your approach, you increase the likelihood of navigating the forex market safely and achieving consistent results over time. Like I said, this is going to be just one out of so many series. Just make sure you're connected to this YouTube channel, you subscribe to it, and you turn on your notifications, because over time I'll be talking about the research aspect and I'll be talking about the disciplined trading aspect. But for today, let's go into the risk management. Now, effective risk management. Effective risk management is crucial in forex trading. These are just some key risk management factors to be considered. You have the position sizing, you have the stop loss orders. Did you see anything like take profit orders there? You have the stop loss orders, you have the risk reward ratio, you have the use of leverage, the prop firms, and all other funded investment programs that exist. You have the risk per trade percentage, you have the correlation analysis, now correlation analysis is going deeply into price action, technical analysis, right? You have the factor of avoiding overtrading. You could regularly review and adjust your principles in light to whatever it is you've discovered over a period of time. Right? Now, let's quickly deal with this one after the other. Position sizing. What exactly does position sizing mean? It helps you determine the size of your positions based on your risk tolerance and the specific trade setup. You should avoid risking more than a small percentage of your trading capital on a single day. If I ask each and every one of you today, you have $1,000. You have a $1,000 trading account. If I ask you today, how many trades or how many percentage do you want to make in a week? I've asked that question severally. If I ask you right now, you know what some of you would say? Some of you would say 10%, some of you would say 20%. Some people even say 50%. You know why? You're saying it, it's sweet. It's sweet to say yes. Who doesn't want to make 50% of their capital in a week? I do. I want to make it. See, I'm not, how do I put it? I'm not an immortal being when it comes to trading, right? I'm still in this flesh. I need to eat. I need to achieve goals. So I personally would also want to do 50% of my capital in a week. And look at where position sizing comes into play. You shouldn't look to make what it is you're not willing to risk. Let's go back to loss management. If I'm not willing to lose 50% of my capital in a week, why should I be looking to make that amount? Loss management. Stay comfortable with wanting to make what you're willing to lose. As long as you do that, you would win more than you lose. You know why? Your emotions are not tied to the outcome of the trade. Think about it this way. For those of you who have been trading, if I take a trade and in my head, I'm like, oh, if I lose this trade, that's just 1%. Okay. In my head, I just decide that, okay, I've lost the trade. I've just lost 1% of it. It puts me in a better position to undo the loss if it happens. Two things will happen when you take a trade. It's either you win or you lose. Now, if you prepare your mind for the loss, guess what happens? If you eventually lose that trade, right? Please, I know it's supposed to be if you eventually lost that trade. I'm just comfortable with using the word lose in place of lost. So if you eventually lose that trade, guess what happened? You would still come out great. You'd be amazing, right? It won't bother you. You know why? Because you prepared your mind ahead of the eventuality. You prepared your mind ahead of that, ahead of that, ahead of the results. It's just a moment. Power just went out, so because I'm in Nigeria. So, so back to what I was saying. Yeah, if you could prepare your mind for the loss, you would be in a better position to handle it when it comes. People don't prepare their minds for winning. You don't need to prepare your mind for winning because winning is a good thing. In life, adversities would make or break a man. Listen, they did not say in life, winning, being successful will break or make a man. Adversities. Why? Every bad thing that happened to you will either make or break you. Jeez, just now. Sweating. Right? Adversities would either make or break a person because adversity is not a good thing. If bad thing happens to you, the way you perceive it will determine if it's going to break you or make you. So in this case now, position sizing is literally, if I continue like this, if I continue on this place, I'll spend several hours here. Don't worry, I'm probably just going to be here for 30 minutes max. Hold me to it. Right? Now, if you prepare yourself to only risk a certain percentage of your trading capital on a single trade, it could go as deep as you just decided to risk 1% of your capital every day. In a period of 5 days, if you lose all the trades for that week, you just lose 5%. If you lose 5% of $1,000, do you think you'll be bothered? No, that's position sizing. Now, what about stop loss orders? This is the actual work. This is you implementing what you need to implement to put yourself in that position of determining your loss. What do I mean? Stop loss orders, when you use stop loss orders, you actually limit your potential loss. So if I'm deciding that I want to risk 1% of my capital, the use of stop loss orders in respect to that 1% is what automatically puts me in that position of only losing 1%. So when you set these orders at a level where you're willing to exit the trade if the market moves against you, it helps you control risk and it prevents significant drawdowns. I'm going to add something to this stop loss orders. Most of you have the concept of when you lose a trade, because you're so fixated, because you feel the strategy you're using does not give you any reason to lose, right? You feel, oh, that's one you lose. In fact, you tell yourself, you validate the reason why you lose it. That's another thing I'm going to be talking about, maybe subsequent sessions. Yeah. Some of you validate your losses. Oh, okay. I see the reason why I lost this trade. If you say I don't do it like this, now no go lose now. You know what you're doing to yourself? Do you know what you're doing to yourself? You're making yourself see reasons why you should not lose. You're not managing losses. You're putting yourself in a position where you think losing is inevitable. Right? You're putting yourself in a position where you consider only wins to be the order of the day for you. You don't do that. And so even when you lose a trade, you just come up with the concept of, okay, you reached 1%. Oh, I've lost this trade. Okay, it's setting up again. Let me take another trade. And do you know what most of you do? You take 2% on the next trade. Why? Because you want to make the 1% you lost and then make an additional 1% on it. I'm sorry for you in advance. If you've not done it, if you're looking to do it, I'm sorry for you in advance. People have done that, and guess what? At the end of the day, they lose that account. If my risk is 1% in a day, and the first trade I take is with 0.7%, right? If I lose that trade, the right thing for me to do is to reduce my risk to get into another setup. So I'm saying that if you're looking to make 2% or to reach 2% in a day, It's just a moment. Let me chat my. Where's this? Okay. Right. So if you're looking to risk 2% of your capital in a day, ladies and gentlemen, and you risk the first 1.5%, or you lost the first 1%, do not look at increasing your leverage. In fact, if you put in 1.5% on the first trade and you lost that 1.5%, don't look at trading with another 1.5%. No, reduce your risk. When you reduce your risk, you put yourself in a position of comfort. Right? You put yourself in a position of comfort. And that is what would help you control risk and prevent significant drawdowns. I'm going to run through the rest very quickly. I have less than 6 minutes. You establish a risk-reward ratio before entering a trade. How much am I risking? How much am I looking to earn? So if I'm risking 1%, then it means I'm looking to make 1% or 2% or 3%. You have that set up in your head. When you ensure that the potential reward is at least 2 or 3 times the amount you're willing to risk, you would be able to your profitable trades would definitely outweigh your losing ones. So if the technical strategy or the technical know-how you're looking to consider to trade with is one that gives you the potential of 1 to 2, 1 to 3. It means when you risk 1%, there's a potential, you have the possibility of earning 2% or 3%. Guess what? If you're doing 3 of those trades, if you're winning 3 of those trades, and you're losing 3 of those trades in a week, because the first 3 you won gave you times 3 of what you risk, you would always come out winning. That's the risk to reward ratio. Now, what about use of leverage? We've been blessed. For those of you who are just coming into trading, you're blessed. How? Prop firms. Right now, you don't need to put in so much of your money into the market to trade and make little money. No, you could commit those little amounts to any prop firm if you need. I don't speak for any prop firm, but there are reliable ones that I know of. If you want information on them, you could just directly reach out to me, right? You could put in little amount of money, commit it to them, and then they give you huge capitals. I know one that gives you risk $300, you give them $300, they give you $10,000 to trade, right? But let me tell you the trap behind that. Most people think that, oh, because I have big equity to trade, I should also risk big. No, you need to be cautious with leverage. Because guess what? Even though the fact that you have that equity and it can help you amplify your profit, it could also help you increase your significant losses if you're not careful. So it's better you just consider lowering your leverage levels so that you can manage risk effectively. Risk per trade percentage. Define a maximum percentage of your trading capital that you're willing to risk. I've said this before. It ensures that no single trade can disproportionately impact your overall portfolio. So if you have in your head that you're just risking 1% of your capital, you're risking 2% of your capital on a trade, guess what? If you lose 5 trades in your head, how many percentage have you lost? You've lost 10%. Right? Correlation analysis. You should also, and now this is a bit technical. Understanding correlations between different currency pairs. Diversifying across uncorrelated pairs can be beneficial as losses in one position may be offset by gains in another. Now let's go into this. Euro USD, GBP USD. For those of you who have been trading, that's the euros to the United States dollar, the British pound to the United States dollar. Everybody understand that these pairs, they kind of like move together. Yes, sometimes there could be little delay. One could delay from the other, but guess what? If Euro USD is on an uptrend, 70 to 85% of the time, GBP USD will be on an uptrend. Now, guess what? If you're looking to take 2 trades, it's not advisable that you look at Euro USD and GBP USD and take one position on 2 of them. It doesn't make any sense. It doesn't. I see people share their screenshot of it. I see GBP USD buy. They have 5 position on it. I see Euro USD buy. And I'm like, how? How do you even do this as an investor? Have you forgotten that just one thing happening, one major thing happening on Euro USD would definitely impact GBP USD? Why not look for uncorrelated pairs? You could have a position on Euro USD and have another position on GBP JPY. Guess what? If you lose on Euro USD, GBP JPY does not have any correlation with Euro USD. So even if you lose on Euro USD, there's possibility that your win on GBP JPY can offset your loss on Euro USD. This thing is psyche. Whatever I'm sharing with you right now is what you ought to pay probably thousands of dollars to get. Euro USD, Gold USD, GBP USD, and you have buy position on all three of them. Are you the bank? Is it your money that is controlling the market? What if things go south? You just lose everything. Right? So that's correlation analysis. Avoid over trading. You limit the number of trades you take. Loss management. I have less than 1 minute. Please, I want to indulge you. Give me an extra 5 minutes. So 4 minutes plus the 1 minute left. I'll round up. Right? Limit the number of trades you make. Over trading can lead to emotional decision making and increased exposure to risk. Focus on high quality setups rather than frequent trading. For those of you who take 20, 25, 30, 40, 50 trades in a week, my question to you is this. Why are you taking yourself to a roller coaster of emotional trauma, back and forth? See, there's so many things to do in life outside trading. Don't weaken your heart pressure just based on trading alone. I'd rather take 1 or 2 trades in a week with 3%, meaning 1.5%, 1.5% on each of those trades. I'd rather do that than to have 0.2% on 30, 40 trades. Guys, because you're parting with money, because you're parting with time, there's an increased pressure on your emotions. When you take a trade, when you take 3, 4, 5 trades, and all of them, 5 of them, you just see loss, 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 loss. You know how it affects you psychologically. Don't tell me if I see win, 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 I'll be happy. Remember, we're not talking about winning management. We're talking about loss management. How do you handle the loss? Forget about, and this is one of the deceits out there. You see people putting wins, 10 streaks of wins on the same currency pair, and I'm like, are you insane? How? If you had red on all 10 of them, will you show it to us? You guys should stop doing this. You should stop, just avoid over trading. Don't be the guy that wants to go back and forth with your emotions, all because you're trading. Avoid over trading. Focus on high quality setups rather than frequent trading. There's so much in life to do outside trading. Some of you, the energy you're supposed to give into loving your partner, loving your spouse, you collect that energy. The energy you're supposed to use to give to becoming a person of value, you pick up that energy too. You take up energies that you're supposed to put into other things, you bring all of them together, and then you just dump it on trading. How? You just, don't let me say something negative. Right? You just kill yourself. You just kill yourself. You see some people 25 at age 25, at age 30 years, they're already going gray hair. It's because of what they put their mind to. Don't do that. Regularly review and adjust. Periodically review and adjust your risk management strategy based on changes in market conditions, your trading performance, and any adjustment to overall financial situation. I'm gonna share a story with you. There's this particular protege of mine, a mentee of mine. Sorry, I actually did not call them mentee. I just want to drive home the point. I call them partners, but let me use mentee so you can understand. She got into trading, and for I think a period of 2-3 weeks, she was really doing amazing. Right? But I don't want to put the figures out, but she was doing amazing. And then I knew, see, and maybe some of you would have experienced this. In her case, she's been learning for a long period of time, and then boom, she catches her break and then starts winning back to back, back to back, back to back, back to back. She was making those withdrawals, heavy amount. And then guess what eventually happened? All of a sudden, she started losing. Now, she was losing. She did not make any adjustments to her risk management. Oh, she only makes, she makes literally 5% every week. when she started losing, she was supposed to reduce that 5% to 2% or 3%. Ladies and gentlemen, there are 4 weeks in a month. If the first week you lose 5%, the second week only look at putting 3% out there for you to lose. Don't say, oh, because I've been so fixated on just 5%, I lose 5% in the first week, I'm going to put 5% in the market the second week, I'm going to put 5%. It doesn't make any sense. When you lose, you reduce your leverage. Don't increase your leverage. Don't use the same leverage. So when you lose 5% the first week, bring it down to 2.5% or 3% for the next week. So only put out 3% in the next week. Right? If you lose for that week again, reduce it down to 1%. Do you know what you're doing? You're putting yourself in a place of position, in a place of control over your emotions. Do you understand, ladies and gentlemen? In conclusion, no risk management strategy can eliminate all risk. The combination of these strategies can help you navigate the Forex market more safely and protect your trading capital. Adjust these strategies based on your individual risk tolerance, your trading style, and your market position, and your market, and the market conditions. I have just 2 minutes to go. Now I'm going to just expose to each and every one of you what it is I do in Forex, how I look at the market, how I analyze the market, and then you'd see how I prepare for loss. Not prepare for wins. You see how I prepare for loss when it comes to trading. Let's take a look at this quickly. So I have any currency, if I could use AUDJPY. So if you look at this, I have a setup here. I'm a price action trader. So what I do is analyze resistance, analyze support. So this is resistance and support, right? Don't worry, if you want to know more about this, you'd always I have videos on this strategy. Now, this is it, ladies and gentlemen. The goal is either the market moves up like this, makes a retest and continue up, or it moves down like this, or it moves down like this, makes a retest and continue down. Now, ladies and gentlemen, in this case, it moved down, as you can see. Right now, moving down, what happens next? I risk only 30 pips of my trading equity. I risk 30 pips every single time. I risk 30 pips. The first trade, I'm looking to make 30 pips. The second one, I'm looking to make 60 pips. If I'm going for 3 trades, the third one, I'm looking to make 90 pips. Now, this is where it makes sense. If I risking 3% on this trade, I will do 1.5% in 2 places. The first 1.5% would be to make 30 pips, which is 1-to-1. The second 1.5% would be to make 60 pips, which is 1-to-2. It means in total, I will be risking 3%, right? I'll be risking 3% to make 4.5%. That makes sense. If I get 2 of these trades in a week, you know what I've done? 9%. How much did I put into the market? 6%. If after the first trade, if I won the first trade, I made 4.5%. If I'm coming to risk another 3%, you know how much I'm putting into the market for that week? Just 1.5%, because I already have 1.5% that is profit plus 1.5% that is coming from my equity. If I win that second trade, all it means I've done, all I've been able to do is to just put in 3% to make 9% in the market. Do you all understand? That's how to trade, right? So I just decided to share this with each and every one of you. I'm so sorry. These sessions are supposed to be just 30 minutes. This is about 37 minutes, but I hope you guys got value. Whatever it is you resonate with, as far as this training is concerned, just put on the comment box. Very soon, I'll be putting out the information on the next phase where we'll be talking about the research work and the discipline trading aspect. I appreciate you all. Looking forward to seeing you guys making those withdrawals, and not just making those huge withdrawals, but following the right process towards making them. I'll see you guys. Peace.